risk management, Joe, is not a one-person job. It is everybody's job. Everybody needs to be involved in risk management. We all need to be working together and talking, and we should be at least annual, sitting around and discussing what are our new risks. Let's identify those, and how are we going to mitigate them?
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hello and welcome to Wrestling Payments, NEACH's new podcast. We are here today at the Payments Management Conference, celebrating 50 years, and I'm joined by Nanci McKenzie. Nanci, can you introduce yourself?
Yeah, sure. I'm Nanci McKenzie. I am the Executive Vice President of Compliance and Product Strategy at Affirmative Technologies. I also have my AAP, got my APRP, and I have a Juris Master's degree in Financial Regulation and Compliance, as well as I don't have enough to do in my day, so I thought I'd go for a Master of Legal Studies at Thomas R. Klein's College of Law with Drexel University and getting a Master in Legal Studies with Financial Regulatory Compliance and with Cybersecurity and Data Privacy.
Wow, that's a lot. I went for a master's degree, and I had a child, then I had another child, and I think I'm done with college. I don't think I could do it. So I commend you on that. Just a little bit as we look at, we have a script. I go off script all the time. Can you talk about your background? I know you did a podcast with Kevin Olson, the payments professor.
Yes.
And he always asks folks, and I love that part of his podcast, where did you come from? How did you get into payments? So, I think you have a good story. Can you just share it with our audience?
Sure. It's quite a lengthy one, so I'll shorten it down a little bit. But I've been doing this for just over 37 years, and I started as a drive-up part-time teller at a commercial bank in Sioux City, Iowa. So then I went from commercial banking. I was a vault teller for a while, where armored car carriers were my customers.
Wow.
Yeah, learned to count cash really fast. And then I went to Minneapolis, Minnesota, was at a credit union there for several years. But then I moved to Northwest Iowa, was in operations and compliance and audit and you name it in a community bank in Northwest Iowa. Started that in 1990. And that was a really interesting time in our lives.
Mm-hmm.
And then did that for over 22 years and moved to Florida and was working for Harlan Financial Solutions. Did core conversions as a deposit implementation analyst with them, and did that for about 5 years. And now that has since been D&H and now Finastra. Then I moved over to a payments association that's similar to NEACH, but ePay Resources, and I did audit risk assessments and was your vice president of payments consulting. And now I'm at Affirmative Technologies, and I get to do these kind of fun things and really enjoy it. But one fun fact about me, Joe,
yes,
is my name is Nanci, as we all have now understood. And I spell it a little different than most Nancys. It's Nanci. And so literally, I am and have been in the middle of the financial, FINANCIAL industry for over 37 years.
Wow. That's I can't say that. It's not the Joseph industry. Can we just back up for a second? Harlan. So you vault teller.
Yeah.
Jumped into operations, and we know operations, the back end of the institution, checks are processing, payments are processing, ACH. Were you doing cards at that point too?
I was, yes. So at the financial institution in Northwest Iowa, we started the very first ATM, which I installed. I was in charge of installation and worked with Shazam, which is another payments association at that time. And that was I want to say it was in 1991 and in a grocery store.
Jeez.
Yeah. And we put together a little campaign back then for the M card. We called it the Anytime Money Card. Woo! And
Real time?
yeah, and over the years from like 1990 until, you know what, I think that it was right at 1990 we installed that machine. I probably have installed, reinstalled, removed, and updated probably, I don't know, 200-300 ATMs.
Wow. And
So yeah,
thinking back to those days, did everyone accept them right away? Were they hesitant?
they were very hesitant. They didn't understand how a deposit could be made into an ATM. All the electronic part of a transaction done through an ATM was very hard to understand for a lot of people. And it really took a little bit of time for it to really get its, traction.
Mhm.
And I think that's true with a lot of electronic payments, right? It
Yep.
takes a little bit of time for them to get traction.
Mhm, mhm. That's perfect. And you're my first guest that's a fintech. So I'm going to poke that a little bit.
Okay.
So Harlan, I would say they were a fintech.
Mm-hmm.
Okay. How did you make that jump? I didn't know you worked for ePay.
Oh,
I didn't know that was in the middle. And now
Yeah.
I know Affirmative Technologies.
sure.
Can you talk about what the difference is for, I think my audience is mostly financial institution, operations people, all throughout, from beginner to, senior management. What was that jump like?
It was really unusual for me, to be quite honest.
Mhm.
So when I was hired by Harlan Financial Solutions, which, to just kind of put the association together, Harlan Clark Checks, Harlan Financial Solutions,
Mhm.
they were affiliates.
Wow.
Yeah. So I mistakenly actually got my resume put across the desk of Harlan Financial Solutions. I actually had given my resume to Harlan Clark Checks. Yeah. So when they were looking at hiring me, what they really were interested in is getting an AAP on staff, because it was 2011 and there really wasn't a whole lot of AAPs yet. And as a matter of fact, here's another fun fact. I got my AAP in 2004 and I was number 284.
Wow.
There's
yeah.
thousands of them now,
Thousands.
but it was very different going from the financial institution to a fintech, because you had to understand that there were the specific fields within the core that actually would make the things happen behind the scenes, right? So my first day there, they said, oh, well, we'll have you working on such and such a conversion, and we're going to have you write in SQL and have you move their parameters from the core they're on over to the core we have. I didn't know how to write SQL at all. So they gave me a book, SQL for Dummies.
Here you go. You're all set.
And I was off and going.
Oh.
But it was very unusual because I was going on a nonstop pace with a lot of responsibilities, with so many different tasks that I had to get done every day, to actually working on one thing. And I actually kind of got bored at first because I
slowed down?
Yeah, I slowed down, and I'm like going, where's all the phones ringing and all the people asking me questions and problems that we were having.
Wow. So I love talking to people, but let's get back on script. You were here today talking about a session.
Yes.
I want to talk a little bit about, your observations of the session, the high level stuff.
Sure.
Questions maybe members have asked?
Yeah. Oh, it was actually a fantastic session. It was data everywhere, making data sense out of the data transactions.
Mm-hmm.
And my room was overflowing full because, it's really about what those transactions that we have right under our noses, all of our members and customer transactions that are coming through our financial institution, the new responsibilities that we are going to have as an RDFI for monitoring of those transactions. Where that lands, we don't know quite yet, but we know that there's going to be some roles and responsibilities of an RDFI in trying to help prevent these credit push transactions from making our customers and members victims of this fraud. But, really overall, it is about your risk management program and what you have in place to help to determine what is a good transaction and what isn't a good transaction, what makes it good and what makes it bad. Mm-hmm. And that's a real trick. It's a huge challenge. And I believe that from the comments that I got from the audience, it was the reason why they came, is they wanted to know, how am I supposed to identify what is a good transaction and what isn't. I'm very familiar with some of the customers that or members that I may have and what transactions they may be putting through and what might be unusual for them. But how are you to do that unless it's manual? So looking for a solution, is not a new thing. It's actually a very old thing. We've been talking AI for how many years, Joe?
Oh, years.
Yep. And I never thought when I was in operations that I would really have to rely on it. That's a far-fetched thing that I don't quite understand. But you know what? Time is here and time is now, and you need to be trying to figure out how am I going to be able to monitor these transactions and not only use my two eyes.
I'm going to circle back to the beginning for a second. So for folks who aren't, we're up into our elbows to all of this stuff and what's changing. You said new proposed RFC monitoring, talking debits, right? Because debits are the danger thing.
Talking credits.
Tell me more.
Sure. So, we saw through the pandemic a lot of fraud going on unfortunately, with the unemployment, with the PPPs, and they were all credits being pushed out. And the fraudsters just really took advantage of some of these programs that we had to help, the consumers try to make it through when they didn't have quite the many hours that they used to work, or maybe they lost their jobs entirely. And unfortunately, they ended up being victims and really unknowingly becoming a money mule. And a money mule, just quickly so everybody understands, is that person that will accept that money as a credit and keep maybe a small portion of it and then send the rest on to another method of payment going out to somebody else that they probably don't know, but they may either feel that they needed to help that person, or they might have been just manipulated into thinking that this was an okay thing and we're just going to be moving this money so that they can help somebody else. So it became a real problem and a real issue because the receiving depository financial institutions, or the RDFIs, they didn't know what to do with these credits because they knew by seeing some of those transactions and that data that this isn't normal for that particular member or customer. Now, at the time, I was working at the Payments Association, and just like NEACH, the answer line was flooded.
Yes.
What do we do with these credits? How do we return them? What return codes do we use? So the requests for comments are really related to what we need to do as an industry to try to prevent not only our consumers from becoming victims or for allowing the bad guys to continue to keep operating as bad guys, or there's just the fact that we need to determine, hey, what return codes should we use? And maybe change them a little bit so that we have a better sense of what they're being used for, giving the receiving depository financial institution the options to be able to return them, give them some direction and guidance on what to do with them. And then, putting not all of the responsibility on the ODFI. ODFIs are responsible for everything that originators do, but it's also a very difficult thing when they have to receive a return and they have no other option but just to keep it.
And you talk about that scenario. I'm going to say and mind you, everything I say is what Joe says and not what NEACH says. So, or what Affirmative or Nanci says.
That's right.
Lots of RDFIs would take the position, I'm just the RDFI. I don't have to do anything. But you would hear the stories in the middle of the pandemic. So we got this whole pandemic going on. People are trying to just figure out how to work from home. And you're hearing, well, yeah, this one account, he's getting unemployment. He lives in Rhode Island, but he's getting Washington State unemployment. And he's getting Massachusetts unemployment. Oh, and it may not be in his name. And at that point, something was going on, but what did the rules say about it? What did NEACH's rules say?
The rules really, they didn't touch on it at all. And, the funny thing is as I've been going through my career, if you would have told me in 1992 that I was going to have to be dealing with credit fraud with an ACH transaction, I would have thought you were crazy, because whoever thinks that we're going to have credit fraud.
It's a credit.
It's a credit. And, I can't tell you, back in those days, I would be fighting for the fact that I don't care if we're just receiving transactions, we still need to have a monitoring system behind them. And I was asked by my board members all the time, what kind of a risk is it when you're receiving? And it's like, it was hard to explain, but there is risk in every type of payment. There, you can't get away from it. There's risk, and you need to identify that risk. It's important.
No, I agree. When it first came out, I was like, credits? We're going to look at credits? But I get it.
Well, and as part of the request for comments, Joe, just to, kind of touch on some of the subjects that they have within the 9 items, is one of them is that we're going to be looking at the potential of requiring certain terms put in certain fields that we may be able to potentially name match much better. Because name matching is always coming up with, oh, well, do we have to name match when it comes to tax refunds, right? And how do you name match? That's a difficult thing, because let me tell you, Nanci, N-A-N-C-I, is spelled N-A-N-C-Y all the time, and that is not going to be a name match.
Nope.
So, what are going to be some standards behind that? So it might be a better way for us to identify that this particular credit does not belong to this particular account owner.
Yeah, no, that's all interesting. I think I could have an hour session with you, but I'm going to try to keep it condensed. But I do have 2 more things I want to get to with you. While we were talking a minute ago, you had someone, and we'll try to be as anonymous as possible, but I'd love the same advice. You had someone approach you and say, I'm new to risk. What do I need to know?
Right.
How would you answer that question?
So I did just have a situation where a person that had watched one of my webinars recently had approached me after the webinar and said, hey, I just took on a role. I happened to be with a third-party payment processor, and we had a loss. But I had been telling the managers over the payments that we really need to put a risk management program in place. But I don't really know much about the risks that are behind a risk management program when it comes to payments. And so would you mind talking with me a little bit? And of course, I love doing that kind of stuff. So I got a meeting set up with him and found out that he was very, very new to the payments world, but very interested in it, knew enough that there's risks associated with it and we need a risk management program. So I found out where he was, what his role was, what it was that he was responsible for, and really what kind of a payment that they were having a loss on. And after I got that general information, I just, okay, you know what? We need to start with the basics. Do you know who NEACH is? And he said, I had to look it up before this call because I knew you were going to ask me that. And we really have to remember that when we're working with third-party payment processors, FinTechs, third-party senders, that is financial institutions and what a lot of people put as quotes, bankers, we have our own language. We talk acronym. It's kind of like a pig Latin type of bankers talk acronym, right? So we have to remember that when we are working with these new to the industry, well, not real new to the industry, but they're really becoming very strong in our industry. FinTechs and third-party payment processors, that we need to talk to them in a terminology that they are going to understand. It's very important that way because we have so many financial institutions expanding their treasury management programs, their electronic payments programs to include third-party payment processors, because that's really where a lot of our younger generation is looking to find their banking solutions.
Just to touch on what you just said for a minute, we don't realize that the Pig Latin we use until we're in another conference. I went to an acquirers conference and it was, what are they saying? I don't know what you're saying. And the other thing we noticed, and they were filled to the brim, their exhibit hall. It was like you had to elbow your way through to get down the aisles. But one of the things it said on lots of the posters was high risk. We take high risk. So it's funny for us because we know our members are pretty risk averse and would never say, I don't know one member that would say, we take high risk originators. Not that it's a problem if you can manage them properly, but there was a time in our history where we poo-pooed origination because it was risky, and we scared our members against risk. It can all be managed now. You just have to have everything in place. So we probably did ourselves a disservice there. The other thing is, how do you make, this is an add-on to your question, how do you get them, or people who should know payment rules, into the payment rules? And I can give you an example. I was a judge for a FinTech competition, and there was a question on all the, standard questionnaire. Every one of the questionnaires said, do you need a SOC 2 or a special audit on your systems? Every one of them said, nope. And I was like, no, yes, you need one. So how do you introduce them to, because they're not regulated,
right?
But the companies they're going to deal with are regulated. So how would you have that conversation?
Yeah, that is a conversation that I have quite often. And as a matter of fact, I kind of got accused at one particular session that I was doing that I got off onto that topic a little more than probably I should have, because I really feel that is so important that financial institutions look to their payment processors, those fintechs, those third-party senders, as closely as they do their vendors, because they are third-party service providers. And if they have something go wrong, if there's a security incident that happens in their shop, it's going to affect the financial institution just as badly. And sometimes, and we've been seeing this more and more, SVB, risk management concerns. And while it wasn't with their ACH originators, it's still a risk management concern. We need to make certain that our risk management and the due diligence behind that is going to be in depth, to make certain that it is a person that you still want to do business with. And if you are going to be working with a payment processor and they're not doing a SOC 2, my goodness, well, what are they doing?
Right.
Are they doing anything? Is there any risk management program at all? And a risk management program being policies, procedures, reporting, processes, practices, products, audits, risk assessments. And let's go back to audits and risk assessments. They need to be doing them just as much as the financial institution. I was sharing in my session this morning that, remember, we have risk assessments that are due. And how many of you ask your third-party service providers, such as Affirmative Technologies, for their proof of completion of not just their ACH audit, but their risk assessment? I've only had just a handful of my clients ask for ours. And I'm saying to my other clients, why aren't you asking for it? You need to be in depth with the due diligence, and maybe even going into that enhanced due diligence, which is because they are exposing you to additional risks. What risks? Maybe they're doing cannabis banking. Don't know. Maybe they're doing some sort of a crypto. Don't know. Is that a high risk? Could be. Not sure.
Right.
Got to know.
If you were listening closely, I would rewind 1 minute, because she literally introduced you to risk management in 2 sentences. And it's if you saw my hand moving like this, that's the cycle. It is a cycle: risk assessment, policies, procedures, audits. I think I left out a step.
I do. Oh, yes, because on the bottom, it's reviews and people.
Monitoring, yes.
So I do another session. It's risk management, rinse and repeat. Because it's a rinse and repeat. You need to rinse and repeat, just like your shampoo.
Yep. And that is, for someone who's new to it, that's where you start. That was the image. I was following the image in my head. That's how it flows. That was perfect. We can go off into other topics.
Okay.
We may still, because there's something you said that I really like, but let's go back to the script for a minute. So I have a part of the script here, because we're at the 50th anniversary of NEACH. Knowing that we're celebrating the 50th anniversary and where we've evolved from, and you've been part of a lot of it.
Yes, I have.
Not known to each other, but you were in the same
but I've still known you for a long time, Joe.
Well, same events. Thinking about today's world, evolution of electronic payments, the ACH, developments in app-based solutions, introduction of real-time payments, whether it's FedNow or RTP, crypto. I got to get my question right. What changes do you think, I'm not going to say the next half century, but what do you see short term, like the next 10 years and beyond?
That's a really good question, but I really see a path that we are definitely on. And we have been talking about faster payments for several years now. And as a matter of fact, as we're recording this, RTP has been out there for 7 years.
Mm-hmm.
It's a long time. It took ACH a long time to take a grip of all of the industry and really send it off soaring. We started in 1972, and it wasn't until probably the mid 90s that we were really talking about people doing direct deposit. And boy, do I remember in 1997 when we were on this path, this journey, we were going to have all people that got any government benefits on direct deposit by a certain date. And then we pushed that certain date out. Right. And then we pushed it out again. And then we pushed, right? So it's a journey, but I really see our path of faster payments taking on big legs. Will ACH go away? No. Has checks gone away? No. So it's going to probably not be in my lifetime or your lifetime that we'll see ACH go away. But I do see that as we're talking faster payments, we're going to see other methods introduced. And so I just want to stop for just a second because I want to make it clear faster payments is not, I repeat, is not RTP, and faster payments is not FedNow. Are they a faster payment? Mm-hmm. Yes, they're a faster payment. Is same day ACH a faster payment? Mm-hmm. Yes, they're all faster payments. It's not faster payments as it is a payment rail. Faster payments is not a payment rail. And if I hear somebody else say that, I'm going to start getting on my soapbox because we do have faster payments. But where are we going to be seeing those go? We're going to go global. Mm-hmm. There is no doubt in my mind, there will be a global method for us to easily transact within the rest of the world. And we are so far behind. I don't know, I've heard 15 years, I've heard 10 years, and we're way behind. Mm-hmm. And if we continue on that path, we're going to end up in an economy that is very fragile. Mm-hmm. We have got to get up with the times. And if we do not start really looking at the methods of digital payments that are going to be able to go internationally, the economy of the United States is going to start collapsing. Mm-hmm. I really firmly believe that. And if we keep on the path that we're on right now, we're seeking some major problems, and it frightens me to death. Mm-hmm. Back in the early 90s, I had someone ask me one time, and I really firmly believe this. They said, how do because I always said electronic payments is our future. How do you think electronic payments is going to affect people in the future? I'm like, you know what? I think that the fall of our economy is the naive consumers that are allowing people into their accounts and being able to just take their money out. Mm-hmm. Financial institutions are not the police. Mm-hmm. It's the consumers. They need to be responsible for their own. And we are now seeing it today. We are having individuals that are having money taken out of their account, and it is in the billions, mm-hmm. even trillions of dollars that we have had the United States individuals, the consumers, the businesses that have lost money, lots and lots of money that should be in our economy, and it's gone. Mm-hmm. We've got to stop. We've got to stop the bleeding and allowing some way for digital banking and digital currency, or possibly currency, or whether it's crypto, or it's going to be some digital method for us to stay in the race globally, I think is where we really need to be seeing our future.
That was really, really good. I'm going to back you up again. So, and I'm going to be very specific to this channel. So, as an operations person, hearing what you just said, and when we always talk about risk and fraud, I get scared. I know people get really nervous about that. What are the 3-5 skills I need to be learning as an operations person to aid in people being able to protect themselves? Is that a fair question?
That's a fair question. So I'm going to approach that in two different ways. First, on the financial institution side, we have operations people that get the job done.
Mm-hmm.
We've been getting the job done for years, and most of that is done manually. And we're not going to be able to continue to keep that manual process up. We need to start looking really seriously at using AI to predict and hopefully be proactive in our risk mitigation to prevent some of these things from happening to our customers and members so that they aren't victims, so that the financial institution isn't at a financial loss. We need to be looking at AI and whatever that solution is to help determine, is this a good transaction? Is this not a good transaction? Is this normal for a person or not? What's their trending? What's their patterns? We've got to be looking at that because we are not going to get away from the fact that we have to do monitoring as an RDFI, right? Okay, so that is number one for financial institutions.
Quick pause.
Yeah.
As if I'm in that operations role, and my first comment out of my mouth when you said that was, well, that's fraud and compliance. That's not me.
That is you. Because the operations people actually are the ones that end up, I just had this conversation right before this recording, and they said, yeah, operations people are really deep and right in the middle of all of the risks. They're the ones that see it. They're the ones that touch it, feel it every day. They're the ones that pass it over to the risk and fraud people, and they're the ones that actually are advising them that these are really things that we should be looking at. Now, I'm not saying that our fraud and risk people are doing a bad job. They're doing an excellent job, but they're not the first ones to necessarily see it. So we need to work together because, risk management, Joe, is not a one-person job. It is everybody's job. Everybody needs to be involved in risk management. So operations, they see the risk. So do the call center people. So do the tellers. So do the branch managers. So do the fraud and risk people and the compliance and audit people. We all see it. IT sees it. We all need to be working together and talking. And we should be at least annual, sitting around and discussing what are our new risks. Let's identify those. And how are we going to mitigate them? Now, to answer your question, as far as the three, as I think what I would say for the consumer is just really continuing to push out the consumer education. I know it's really, really difficult to say, oh, well, just throw education at it. But, our efforts to try to educate our customers and our members to the scams that are out there is really, really important. And I think one key, it's not probably the only key, but one big key is that our call center people, our operations people, our tellers, our branch managers, those that talk to our customers and members, they need to know how to identify those that are victims of financial fraud and how they respond to them, how they handle them. We've got a project team with NEACH that actually under the Payments Innovation Alliance, which I'm a part of, that is promoting and putting together some additional educational material for financial institutions on how to not only identify individuals that might be a part of a financial fraud, that they may be unknowingly part of a financial fraud. Maybe it's elder abuse. Maybe it's an account takeover. Maybe it's a romance scam. There's a lot of them out there. Even a domestic violence situation. We need to know how to identify it, what questions to ask, and how we can try to educate them at that point of what's going on and how we can stop it, how we can prevent them from losing any money, but hopefully not losing any more money. So those are the tips that I would suggest is really get yourself involved in knowing how to hear what your customers and members are saying, what they're doing. And I know that it's a struggle because I have been in that situation. How do you try to convince somebody that this isn't a real bill that's this big, right? There's standards, or even the ones that are the ones you could buy on Amazon, right? The movie bills and the Chinese bills, how do you convince somebody that they're not a real bill? But you need to prepare yourself.
I'm sorry, I'm chuckling because my brother had a Russian girlfriend who needed money for a visa. And no matter what I said, no matter what I told him, that she wasn't real, she didn't exist, he still helped her out. She no. She needs this money. I'm going to send it to her.
Yeah.
Okay. But it happens every day.
It does happen every day. And it's, it's a sad thing, but if you're a victim, you are a victim.
Mm-hmm.
You're not the one doing something wrong. He had a kind heart. He happened to get swindled,
Yes.
as they used to say, right?
Yeah.
He was a victim of a scam.
Mm-hmm.
And just like if you're a victim of the accident
Mm-hmm.
in your car, did you cause it? No, you're a victim.
Right.
Okay. So could you have done something to prevent it? Maybe. If you saw them a second earlier or was able to press on the brake a little harder, you were just trying to help him with that. And if they're not able to or willing to,
That's it.
but yeah, so we try our best. So I think those were the 2 tips that I would give.
Excellent. So this has been a great episode. I think I absolutely have to have you back because we could talk for another hour on all
Probably.
different things.
Yes.
This has been great. But before we end, any last lessons learned, things you want to leave people with about anything? Your presentation, 50 years in payments, where things are going?
Yeah. Well, I think that my thing is that I would like to leave with everybody is that risk management, it's not going away. It's getting more and more complicated, more and more important. And it isn't a should. It's not following guidance. It's not following suggestion. It is a must. And if you do not have your risk management programs in place, operating as they should with a rinse and repeat cycle on them, get on it. I have story after story of financial institutions that are in real hot water because their risk management programs are not effective enough and they are not strong enough.
Mm-hmm.
And board of directors, as much as they want to shift those responsibilities to a risk committee, audit committee, operations, whoever they want to shift them to, they are ultimately responsible. And we need to make certain our board of directors are aware of all of the risks that we are exposed to and how we intend to mitigate those risks so that we can operate in a financial industry that is going to have the integrity and the stability to maintain our economic industry.
Yep.
And, the monetary policy behind all of it is so valuable to us. We can't let that just slip through our fingers. So risk management.
That was excellent. You hear that too?
I do.
No, that's the risk committee.
That's right.
No? Excellent. All right. Well, thank you for joining me. I want to end this session by saying thank you for tuning into Wrestling Payments. I think there were a lot of wrestling matches that happened within there, the stories that we talked about. I think there's a lot of wrestling to come, and I'm definitely going to have Nanci back because I really could talk to her for an hour, and I think it would be a valuable conversation. Press all the buttons, follow, subscribe, leave a comment, and thank you for listening.
Yes. Thank you.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.